You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. Must be Thursday. Time for TWIFO. My name is Mark Longo from the Old Options Insider, as well as from the ever-exciting Options Insider Radio Network. Hopefully you're joining us live, 1:30 p.m. Central, 2:30 p.m. Eastern. If not, after the fact, we know that's where most of you like to do it on your own schedule. Don't worry. We like you guys to Mixlr.com for the live, and, of course, wherever you find your favorite programs there for the on-demand version. Of course, however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. If you like what you hear, throw a review or two our way. It always helps in the algorithm for new people to discover the programs. New people are always coming in all the time, so the more, the merrier. And, of course, we do indeed, yes we do, like to hear from you guys. My usual and sundry co-hosts still out and about hither and yon. My buddy Sean over there, the managing director of derivatives licensing from FTSE Russell, in another time zone yet again. I don't envy that man's travel schedule at all. Usually he'd be here to talk some Russell reconstitution, but we'll get to all that fun stuff nonetheless. Also, my buddy Nick of Bantix fame / infamy, also on assignment here this week. But, I have an able guest, an old friend of the network here, stepping into the fire, diving back in to the CME Group hot seat twice in about a little over a month or so. He is our old friend, Mr. Russell Rhodes, now the Director of Derivatives Research over there at the Tab Group. Mr. Rhodes, welcome back to the CME Group hot seat. It has been too long, sir.
I am always happy to be here. Am I coming through loud and clear?
Yeah, I can hear you.
I'm
cool. Assuming the audience can hear you too. So
okay, just making 100% sure. Now that I'm with Tab Group and I'm basically on my own out here in Chicago with everybody else in New York and in London, I'm also my own IT person. And there's a reason that I dropped out of engineering basically less than about 6 weeks into my freshman semester of undergrad. So just making sure the equipment's working. Doing a sound check, Kenneth.
IT not your forte, sir?
It's okay, but I want to be sure. I want to be sure because I have so many pearls of wisdom, as you would put it, today.
You do have a lot of nuggets to share. Let's get started. I think everyone thinks of you, Mr. Rhodes, as as an equity volatility guy, and certainly you hang your hat in that space. But there's a lot going on in other parts of the market, which I know you are becoming more and more fascinated with as well, including ye old crude. So perhaps let's start there. By the way, listeners, as always, you guys, whether you're listening live or listening after the fact, you guys, as always, can head on over to cmegroup.com/TWIFO. And once you do that, you'll get the report, the This Week in Futures Options report. You'll see all the good data and all the fun, interesting stuff that we're looking at here this week. If you are, of course, a subscriber to all things Quick Strike, then you can get all the premium features that we're looking at here as well, like the sliding and the shifting and all the other good stuff that's in there. And if you're trying it out for the first time, go to energy, then crude oil, and then WTI. And that's where we're hanging our hat for our first stop here on TWIFO this week. I mean, we always like to talk crude. You guys love it. You guys eat it up. But this week in particular, there's a lot to talk about here. Crude has been, shall we say, on the downswing, to be charitable, for the better part of the last few weeks. It seems like not that long ago, we were in the mid-60s and threatening higher. And then all of a sudden, my, oh my, how the worm has turned. A few errant tweets here or there, Mexico, China, and bam, the crude worm has taken a beating. Today, we're coming into showtime at about a 52, half at 260 or so, off, not quite a handle, but almost 2%, about 1.6% here on the week. So yet another week of drubbing here for crude oil. If you're wondering, by the way, where that puts us, technically, for all you technical folks out there who like these technical definitions, we are officially in a bear market here in crude. If you measure, that's of course measured from a drop of 20% or more from the most recent high. The most recent high was back a little bit in late April 23rd, 66.30, and we're off more than 20% from that, actually 22% below that as of at least yesterday. So technically, officially, crude is in a bear market. If you're wondering too, on the data side, does this happen often? Does it happen frequently? At least according to the Dow Jones data here, they've compiled the typical crude market for bear crude market, I should say, for crude. Let me say that again. The bear market for crude, easy for me to say today, lasts around 60 days, and the last one we were in ended the 9th of January. That lasted a mere 40 days. So a lot going on out here. Of course, all these recent drawdowns as a result. It's always this push and pull between global demand and, of course, domestic supply. And lately, it seemed like the domestic supply concerns were going to trump everything. But then, of course, the macro kicked back into high gear with a few errant tweets, and then not just picking a fight with China, but also Mexico and everything else, and all those increased tariffs and decreasing international demand, all really overwhelming the domestic supply story and sending crude down to these levels that we find ourselves at today. I'm going to dive into all this information here in the TWIFO report in a second, but first, Mr. Rhodes, I know you've been cranking away at some research over there in the crude oil neck of the woods and crude volatility. What exactly has been lighting up your tape in the energy space at Tab these days?
one of the great, and we've talked about this a little bit before, but right now it's a great, if I were writing, trading oil based on volatility, which is a terrible title for a book, but I only had 3 seconds to come up with that. If I were going to do that, probably one of the first things I would talk about is the basically the skew of what are the oil options telling us? Where's the fear? And right now, I think when I was on here 3 or 4 weeks ago, the fear was to the upside, which means that, people get hurt. There are some people that get hurt when the price of oil goes up, and there are some people that get hurt when the price of oil goes down. So those people have opportunities to maybe sleep a little bit better at night by using options on futures. And so periodically, unlike equity skew, where we always see the skew leaning higher to the downside, sometimes it's sloped higher going to the downside, and sometimes it's sloped higher going to the upside. Right now, this is as steep as I can recall the implied volatility of options on the downside. The angle there, I wish maybe I got to quantify this somehow, but this is about as steep as the downside skew I've seen since maybe when oil was really under pressure 5-6 years ago, and we were like pushing 30, and we saw this ridiculous panic with 25 strike puts. Yes, we've been that low. 25 strike puts really having high volatility priced in relative to like the 30 strike. And then slowly but surely it flattened out, and we found a bottom in oil. Right now, looking at the option volatility by strike using the quick strike tool, it looks like the market is concerned that there is more downside on the horizon, and very few people really believing, very little paper believing that we're going to get a rebound anytime soon. And I can take a picture of this and throw it out on Twitter if you want me to. Because do what?
Go for it. I said go for it. Why not? It's always fun.
I would always like it. It is a little bit easier when I would do shows with Mark Sebastian because, he would talk enough to give me time to, basically write a blog and throw it up while we were on a show.
Tell you what, I'll run through all of the TWIFO results here while you get your picture together. How's that? I'll buy you a little time.
I'm gonna put a little skew picture out it'll take me probably I'm actually about halfway done already.
There you go.
Just a few moments here.
They do say a picture is worth 1,000 words. But yeah, looking here at these tools, listeners, the TWIFO tools, as he so referred to them earlier. Again, we are off quite a bit. Vol, interestingly enough, a bit of a mixed bag here. Longer term on the curve, we're seeing a decent market bid here to the vol. But nearer term, I would say, looks like from Dees and earlier, Dees on in of this year, vol mostly coming in, which is kind of interesting. And it maybe speaks to a little bit of a tale of two cities when it comes to the outlook on crude beyond December of this year. In terms of overall action this week, as you might expect, a hot and heavy week, and that's pretty much the case. OI jumping up about 7% this week on CME there, which, of course, is a big number. You listen to this show for a while. Usually we're at like 2 to 3% as a given week, so this is more than double that. So a very, very strong week out here. Let's see what was lighting it up here. Again, we're coming into showtime. We're at about 52.60, so... we'll play a guessing game, Mr. Rhodes. It's always fun to play a guessing game as I scroll through here. If you had to guess, we're at about 52.60 right now. If you had to guess, what was the big option du jour, the month in strike that was lighting it up this week, Mr. Rhodes, in WTI? What's your spidey sense telling you?
Oh, we're June. July 50s puts.
Yeah, pretty much. Unless you're looking at the TWIFO report, which you might be. But that's a good guess.
I'm
not.
Guess, and can I elaborate on where that guess came from?
Please do.
And the guess came from. It's always a round number. I've been and I listen. I like listen to the. I was listening last week. I even heard my name mentioned last week. Got very excited.
only negatively, of course. But yeah, crude does like to aggregate around those round numbers, doesn't it?
Well, I loved when you mentioned that I was going to come on and talk about oil vol, that you only said, yeah, we're going to have Russell on next week. And I'm like, man, I'm like Madonna. I'm one one named person. But no, in all reality, for some strange reason, and this has gone on as long as options have been around, the round numbers, man. Remember, and I know it's a completely different market, but for the longest time, the 30 strike calls in VIX, it was just, which made no sense because we hadn't hit 30 in 20, in like 4 or 5 years. And then it was the 20 strike calls. And if you're asking me to play this game with oil, I'm going to take a look at where oil is. I'm going to take a look at what direction it's been going, and then I'm going to pick the next round number to the downside and say that's where it's at. And and you can barely see it, but I think there's actually a little bit of a bump to the upside on the chart that I tweeted out at 50, where the implied volatility might just be a little bit higher in that round number. And if you're actually thinking about getting some protection, maybe you ought to look at the 50 and a halves or the 49 and a halves or something like that. That's why I wanted to elaborate upon all of that.
But you're right. Crude, we talked talked at and about and to all the above, a lot of different products here on the show. And crude is one of the ones that really tends to aggregate around those even numbers. We see it a lot with, even numbers in gold, like 1,300 as well. And certainly the equities do a bit as well. But crude definitely, you're right, seems to aggregate around those even levels. And that is pretty much exactly what we saw this week. It was, let's see, where were we out here? It was the July 50 puts that were leading the dance out here this week, with quite a few going up, total about 24,000. By the way, July was the big contract month this week, with nearly half, about 43% of the paper going up in July. Good chunk of that in these 50 puts. Let's see exactly how these broke down. Let's see here. Looks like it was pretty aggressive trading throughout the week, with the lion's share coming yesterday. 8,000 on Wednesday, 7,000 on Monday, 4,600 Tuesday, and 4,700 today. So fairly even, with a couple of spurts there on Wednesday and Monday. And net opening, as you might imagine, a lot of new positioning here on the 50 strike, which, not surprising, we're hurtling down towards this strike and away from our former levels in the mid-60s. So not surprising to see a lot of new positioning there on the 50 strike. Let's just glance here really quickly. And okay, yeah, looks number 2 are going to be the 45 puts. So kind of a nice little put strip, but far less, about 17,000 of a paltry 17,000 going up there. The lion's share actually on Monday, 6,500, and then 4,000 on Tuesday, and the rest kind of scattered throughout the week. More opening, net opening of about 5,500 on that strike. So even more percentage-wise, new opening positioning on the 45 put strike, which is kind of interesting. Then it's not all puts all the time, listeners. There were some calls lighting it up too. The double calls, 55 calls, doing about almost 16,000 there as well. 15,800, the big day coming on Wednesday, 5,100. And today about 3,000, 4,000 on Monday, and 3,300 today. Because you mentioned the skew, Mr. Rhodes here, we like to look at the skew here. A little tool we like to use called the quick skew. That, of course, measures the 25 delta call, 25 delta put. But the cool thing about it, the reason I like using it, I wish every product had this, quite frankly, is it tells you the change from week to week here on the skew and how we're looking last week's skew to this week's skew. And looking here, let's look to July, because that's where the action was, even though it's a little bit close. But that's where the people are trading, so we got to look out there. And let's see here. Let's go a little bit farther out, because that's so close. That's going away in roughly what do we got here? It's going away in roughly 11 days. So that's pretty much all gamma at this point. Let's move a little bit farther out let's go to the number 2 month. Let's go out to dare we say it, August. How about that? Let's go out to August and see how things are moving and shaking out there with a little bit longer time horizon for us to analyze, listeners. And then when we do that, when we go out to August, we could see that, the calls last week were about 8.3% cheap to the at the money, now 11.1%. So calls coming in pretty markedly, and puts getting a bit more love, not a ton, but a decent amount. They were about 10.6% rich to the at the money, so puts clearly bid, as Russell was alluding to. This week, nearly 12%, 11.7% rich to the at the money. So we're sliding down that skew, but also coming up it a bit there as well, which is kind of what you'd expect as you're moving down towards these levels. You're going to see those puts as you start to threaten these new even levels like the 50 handle. You're going to see those puts get a little bit bid, and that's pretty much what we saw out here. Mr. Rhodes, anything else surprising you from a crude volatility or skew or any other perspective, sir?
I was a little surprised at how steep that angle is with the July, and then I started playing around while you were talking. I was kind of how it looks like we're going to bottom out sometime between July and August. How's that? Because the curve was, I started playing around looking out in August, and it's a lot flatter when you take a look at August versus July. I mean, part of that just might be the lack of timed expiration, but I was kind of surprised at the dramatic difference between the two. It looks like nobody's paying up for like the 45 puts on the August side versus the 45 puts on the July side.
So there you go. Russell Rhodes has called it.
Yeah.
Crude will bottom out between July and August, sir. You have set that in stone. It is now inescapable.
I know, and it'll be saved on the intraweb for posterity, either whether it works or not.
Yes, one thing I know about predictions is that they can always be held against you. So, so enjoy that, sir. Since you're our guest in the old hot seat there, I will allow you the privilege of choosing where we go next, sir. Which product would you like to hang your hat on next?
I'd like to take. I mean, nobody sees the notes but you and me. You've got rates in Eurodollars with a question mark. Where what do we think about all of this? Well, I love with rates, and it's not necessarily looking at the options, but looking at the CME's Fed tool, which is just one of the most awesome things that's free on the internet. And the fact that we've got all of a sudden we've got a better than 50% chance we're going to get a cut by the end of the summer. Are maybe that cut's coming between July and August oil contract expirations, and that's why everybody thinks that oil will have bottomed out by then. I don't know. But I'm just absolutely amazed at how quickly the market attitude has changed with respect to the direction of interest rates.
Yes, it has been a market shift in not too long. That, of course, came in the middle of one of our sell-offs earlier this week, and we saw a nice little pop in the equity markets, and then it kind of got overwhelmed by more trade war talk, and then all sorts of other fun things happening. So it has been kind of just one of the many little ingredients that we've thrown into this swirling volatility pot we're looking at out here. Speaking of looking at things, I'm moving on here, listeners. You mentioned, we don't talk rates a ton here on the show, except for weeks like this where things are really happening out there. And usually for this, I will toss it to my cohorts, Nick, who spent a lot of time in the Eurodollar options pit, and even Sean has spent some time out there as well. I never spent any time in the rates pit. But nonetheless, we'll pull it up and we'll see what interesting things are lurking. Do you have a favorite one to look at here? You like the 2-year, 5-year, Eurodollar, 10-year? What's your product du jour?
Even though the time frame it differs, just because the 10-year seems to be the benchmark market within that space, the Eurodollar, the Eurodollar market is a lot more professional. I feel like how when you see the market being discussed on the general news, they talk about the Dow Jones Industrial Average instead of the S&P 500 because that's what most people think the market is. I think I would think of that with respect to the 10-year versus Eurodollars. So I think 10-year is what a lot more people would actually be looking at, even though the Eurodollar market would be a little bit more professional. And, man, I see some out-of-the-money skew to the upside in the 10-year futures options, which indicates some people are buying some probably low cost options, but paying up for them volatility wise, looking out to July or so.
All right, all you rates heads who keep writing in, so we want more rates on the show. Here you go, Russell. You have Russell to thank for it, but of course it's inescapable this week. It is definitely part of the conversation here, and there's a broad complex of names to look at. I did, as Russell alluded to, did just pull up the 10-year here to see what was lighting it up. Coming into showtime here, they're hovering the at-the-money strikes right on that 127 strike, right about 126, almost 30 out there. So up ever so slightly for the futures here on the week, but it has been a topsy-turvy week out there in terms of rates and yields, all that fun stuff. Let's see, vol, actually, interestingly enough, a bit of a mixed bag. If we take that front day contracts. They got 1 day to go out of the equation, which is, that's not really vol. We go beyond that a little bit. Vol actually off a bit, which again, seeing that's not surprising. The big quote unquote event risk, at least for the near term, has happened. The Fed has kind of not pre-announced, but pre-indicated what they may be leaning toward doing. So that may be taking some of the air out of volatility balloon. That's pretty much what we're seeing here. Vol off, not quite a point, but pretty close to it, almost across the board here once you get beyond that front day contract. In terms of where the action was here in the 10-year, it looks like it was out in July with nearly about almost 40%, 37% of the paper going up out here. And we're talking paper, listeners. There's some size paper going up out here. We were just talking about 10, 15, 20,000 contracts in WTI. And WTI, one of the more active energy contracts. And you get into the rates complex, it's just another order of magnitude. We said it before with euro dollars, but the 10-year, also a similar beast. And ironically, even though July was where the lion's share of the paper was this week, it was actually that contract with 1 day to go that had the biggest print of the week. It was the 126 half puts going up 108,000. Yes, you heard that correctly, listeners. 108,000 times here this week. Trading pretty hot and heavy all week, but the big day, of course, was Wednesday. 53,000 of them going up on Wednesday, 21,000 Monday, 20,000 on Tuesday, a paltry 12,000 today. That's pretty much the entire volume on an entire strike for an entire week in a lot of the other products. If not, that's sometimes the entire volume of an entire product. We're talking about that's just 1 day's volume for 1 month and one strike here in the 10 years. So just a very different beast that comes to come to grips with when you're looking at the action out here. Then it looks like maybe there's a bit of a roll because the numbers are kind of similar out here in July. Let's see. No, it's just the net total wise they line up here as well. The 126 even puts also taking the number 2 spot, but just by a hair. Only a paltry 104,000 of those going up. The big day for those actually on Monday, 46,000 of those, 22,000 roughly on Tuesday, 28,000 on Wednesday, a mere about 8,000 or so going up today. There were some calls, wasn't all puts on the board, listeners. 128 calls, also active as well with about 94, almost 95,000. The big, actually pretty even all week, about 27 to 28,000 most of the week, 23,000 on Tuesday. And a mere 15, almost 16,000 going up today. You mentioned kind of crazy call skew. Let's look at some of that. Let's look out here to, again, it's kind of close. It's only a few weeks out, but we'll still go out to July because that's kind of where the lion's share of the action was again this week. Let's just see what we have out here. We don't get a chance to break down the skew in the 10-year very often here. And it looks like a week ago we saw the puts were about 3.3% cheap to the at-the-money. This is from a vol perspective, listeners. This week they're off to almost 5%. So the puts coming in, and the calls, like you mentioned, Mr. Meatball. I don't know, Mr. Meatball. I apologize. Mr. Rhodes. Calls getting quite the lift here. They're about 3.4% rich to the at-the-money. This week, they're almost 6%. So not quite a double, but pretty aggressive boost there, about 5.8% up there for the calls coming into today's show. So that kind of is in line, even though the big prints were in the puts, Mr. Rhodes. It kind of is in line with what you're saying. The calls are where the action is here this week. Does that surprise you? Anything else surprising you out here in the panoply of action that is rates this week, sir?
It surprises me that a lot of the volume was on the puts or on the put side. I wonder if some people got caught one way or another, thinking they had some options that were worth something, and that changed on them very quickly. And that's where you got the rebalance from. There's time to hedge relative to the next rate decision where people think there's going to be a change. That meeting's actually, I was looking at the date while you were talking, that meeting is actually July 31st. A week ago, there was a 70% chance nothing was going to happen. Now the Fed tools, or the CME FedWatch tool, is telling us that there's like about a 65% chance that you're going to get a cut. And once again, speaking of cutting and pasting, I'm going to tweet something out. I've got the volatility by delta for the July 10-year and the August 10-year. And with the out-of-the-money calls in August, you can see this dramatic move to the upside. And keep in mind that the Julys are going to expire before that Fed meeting. So the big difference here is pretty interesting to take a look at as well. So I'm going to do a cut and another tweet and tag more people with this one as well.
You're a fascinating cutting and tweeter while we do the show. But let's move on into your old, and I should say really you're still your current stomping grounds, even though you are diversifying yourself into energy and rates and everything else. But you made your bones, so to speak, in the equity volatility space. And so there we must return once again. And it has been an interesting week. It's pretty much every week for the last month or so has been an interesting week when it comes to volatility. In a nutshell, the volatility came and then it went. Then it came back again and it kind of lingered for a bit. Then it kind of went away again. And that's kind of where we find ourselves today. Listeners, coming into showtime, we saw VIX cash was shy of the 16 handle ever so slightly, just back over it now. It's kind of flirting right at that 16 handle right now. RVX, the old VIX of the Russell 2000, is about a 19 and a quarter. So 16, 19 and a quarter, that's spread right around 3.25 points. It's up slightly, ever so slightly, about a quarter of a handle from this time last week. But it still has been interesting to watch that ebb and flow of small cap vol versus large cap vol, because small caps haven't really been playing the way you might anticipate given all the macro headwinds that have been buffeting the market of late. Our old friend, the volatility of volatility, aka VVIX, at about an 86. That's actually lower than it was this time last week, about 7 handles lower than where it was this time last week. So a lot of interesting things are lighting it up. Speaking of lighting it up, Sean will be back here. Well, actually, before we even get into all that fun stuff with the recon and all that good stuff, Mr. Rhodes, obviously a lot to sink your teeth into here on the volatility side. So let's start there. What is catching your eye amidst all this just myriad back and forth in the realm of equity volatility, sir?
It's holding up fairly well when we get the rebounds. It's not just because when we have going back a few years. We'd have a little bit of a sell-off, and then we would get a really nice rebound fairly quick. And as soon as the rebound started, you would see kind of a crushing of the equity volatility. I think the amount of non-quantitative uncertainty in the form of tweets and what's the Fed going to do, and are we going to start a multi-front tariff war? Can't fight a multi-front war effectively sometimes. Multi-front tariff war might be very difficult. Maybe Mexico and China just decide to trade with each other and shut us out. Who knows? But it just seems that we're holding up a little bit better when we get those nice bounces in the equity market right now, which I think is a pretty good indication that a lot of people believe we're not out of the weeds quite yet. Now, whether we are or not, the market will let us know. But used to not think of equity volatility as being elevated at current levels, but relative to the most recent history, it is.
Yes, and you're right. And all that uncertainty, of course, we'll talk about it again, I'm sure, tomorrow on Volatility Views, is also indicated, I should say, by what's going on out here in the volatility futures, which have been flat and are kind of scarily flat and have been for some time, showing that the volatility market, at least the equity volatility market, kind of a bit of a coin flip. They don't really know where it's going, so just keeping it all flat until we figure all of that good stuff out. Let's dive into, let's kick things off as we like to do out there in Russell land. Again, listeners, you guys can do this if you're listening for the first time. You want to check it out, what's going on, cmegroup.com/TWIFO. Go to equity indices, and then we're going to kick things off here in the old Russell 2000. See what's lighting it up. See what Sean is busy out there doing on his roadshow, week in, week out there, getting paper, getting volume for these Russell options. They don't need it in the micro futures. Those things are lighting up the tape. Let's see what was lighting up the tape here. Options-wise here this week. It seems, another big print. Pretty long-term print here as well. SEP. These are the SEP. SEP 1,300 puts, nearly 6,000 this week. That's a pretty big print here for these kind of still new Russell 2000 options. Let's see what the big action was. It wasn't one day. It actually was spread out throughout the week. By the way, come into showtime, Russell just north of 1,500 with about, 1,500 and a half roughly, up about 2.3% on the week. So small caps obviously feeling the love, having a good week up here, but it was put action and actually closing downside put action. So maybe some of that is indicative of some of the sentiment as well. Looks like about 3,800 going up on Monday and about 1,400 going up again today. So a couple of days of action with some scattered stuff going on in between there as well. Net closing, about net 2,000 of that, 2,200 or so was actually closing. So closing downside put action seems to be the order of the day out here for a pretty sizable trade out here in the Russell 2000 puts. Let's move on really quickly to the E-mini S&P, see if we see similar paper flow. Again, going to be a lot more net volume-wise going on out there, but still, let's see if we can parse a few trends here within the tea leaves. Let's see here. There we go. Loading up. I like to do select all, Mr. Rhodes here in the quick strike. Some people get terrified by that. It's a little intimidating, and it takes a couple extra seconds to load. But I find it worth it just for the sheer volume. And you do stuff like that, you find little nuggets here. Looks like, what do we got here? We've got the June. Looks like coming in showtime. We're about 28.40 in the S&P, up over 3% this week. Listeners, about 3.2%. Seeing looks like 27.5 puts in the E-mini S&P are leading the dance this week. About 55,000 of those bad boys lighting it up here this week. So fairly out of the money puts, roughly 80, 90 handle out of the money puts. Trading fairly actively all week. A lot of that closing. Looks like maybe someone giving up the ghost here on that, or maybe they had also drew an aggressive line in the sand here on some of these downside days and taking it off for a healthy profit right now. It looks like it was pretty active closing all week. 32,000 on Monday, 15,000, almost 16,000 yesterday, and then about 4,000 and today, and about 3,500 on Tuesday. About almost 30,000 of that closing. So a lot of closing on that 27.5 strike. Someone obviously getting the heck out of Dodge here in these June 27.5 puts. Interesting stuff. Downside closing actually looks like, Mr. Rhodes, in both the E-mini S&P and the Russell 2000. Does that surprise you, and anything else surprising you out here in the equity land this week, sir?
They think the downside is over. Is that what we're reading into that?
Possibly. You never know. It could have been.
Possibly?
They could have been.
Yeah.
With some of the futures options, sometimes it's hard to see. Exactly, were they writing these early? Were they crushing the bid all week? So they're closing, but they could be closing. Obviously, in equities, we know there's a lot of the old harvesting of the risk premium. So they could have been closing out a nice bunch of 27.5 puts that they blasted away for a hefty premium as well. So first blush, it's hard to tell.
You know what? I would honestly, I would bet that's what's going on there. I think there's a lot more professional use, especially in that size, of the futures options or options on futures. So I would guess that it was some people that had been harvesting that volatility risk premium and are worried about their potential gamma risk as far as that's going. That maybe one too many. And actually, I think I've forgotten which money manager it was, but there was some money manager that that recently said, after the most recent Trump just going after China out of nowhere, he said, you know what, I'm going to go neutral on equities and put some money into bonds and wait until all of this weirdness is over with. It's not Templeton, but it's somebody along those lines. And I think if you are making a living by selling options with the hope that the volatility is a little bit overpriced like it normally is, in this day and age where it's hard to know what may happen over the weekend, depending on what comes out on social media that could impact your positions, maybe you take the summer off. I don't say take the summer off.
I don't know if you've heard this.
You know what I'm saying?
I don't know if you heard this, Russell. Some say sell in May and go away. Have you heard? I don't know if you've ever heard that, but
I have, and I actually did some studies on if option selling works better in the summertime and it relative to the rest of the, I did option strategies that work better in a neutral market as opposed to just going to cash. And you know what I found? Not a damn thing.
Yeah. Are you saying the conventional wisdom does not hold?
No, well, what I did was I substituted the, I substituted the 2% out of the money covered call and selling at the money put options instead of just going to cash, and did this over like a 30-year period. And you got different returns. Sometimes 1-1, sometimes it was like, let's say it was 30 years, 16 years you were better off selling options, 14 years you were better just going to cash. And in reality, buy and hold through all of that beat both of those other two things. that the sell in May doesn't really work that well anymore.
You're bursting the bubbles of so many of our listeners right now, sir.
I'm sorry. It's I don't work at a volume-driven entity anymore.
There you go. You have many new masters, and none of them are transactionally based. Let's look here. Actually, speaking of transactions, there's going to be a lot going on. Sean will be back in the studio, I believe, here next week or at least live with me on the show to talk all the goodness that is Russell reconstitution. That's a big time. If you're out there, obviously trading, slinging some equities, listeners, you know that drives a lot of paper. We talked about it a lot last year on the show, just how much was going up as a result of that reconstitution. And Mr. Rhodes, it sounds like just so timely, hitting the presses right before showtime here, Mr. Rhodes. You actually have some interesting data on that exact subject, do you not, sir?
Well, what I did was took a look at two of the most, I'm not going to say the hottest, but two of the most commented upon and observed IPOs of 2019, Lyft and Uber. They both will be, they certainly will go into the Russell 1000. And we find out tomorrow after 6 p.m. Eastern time what the new constitution or what the new composition will be of lots of FTSE Russell indexes, including, the Russell 1000 growth, the Russell 2000. Most people focus on the Russell 2000. The market caps that determine what index you're going into and how much you're going to comprise of it are based on the May 10th close. So I just went back to May 10th and I looked at where, about where Uber and where Lyft would fall in relation to the 976 stocks that are currently in the Russell 1000, and then backed into about what percentage of the index that would make them. The Uber, I guesstimate, is around 0.23%, and Lyft is about 0.05%, which doesn't sound like a whole lot, but when you take a look at the Russell 1000 ETFs, and there's a couple of them that have over $1 billion, they're going to need to buy about 1 million shares of Uber and about 170,000 shares of Lyft on the close on June 28. Now, that's a very smooth process, and Sean will expand upon that greatly when he's back. However, this does increase demand for shares of both of those companies, and I'm just talking about the Russell 1000. The Russell 1000 growth, which is a little bit more difficult to figure out how many shares would need to be purchased by ETFs that follow that. There's about 550 stocks in that index. Most likely, both of those are going to go into that index. Again, we will know after the close tomorrow or late after the close tomorrow. There's over $40 billion in ETFs indexed to the Russell 1000 growth. So the whole point is there are going to be lots of shares of Lyft and Uber that are going to need to be scooped up and held by passive index funds, which has not occurred so far in the life of those two companies. And just to take a little bit of a segue on that, the numbers will be much greater at some point if they ever get added to, let's say, the S&P 500 or something like that. So right now there is some pent-up demand that will probably be worked into the stocks in a very smart way. I'm not saying rush out and buy Uber and Lyft, but they will start to be impacted by the flows in and out of some ETFs as well. And the initial flow is going to be into both of those stocks. So you're going to see a little bit of support for both those stocks.
No, that's always, it was certainly, I mean, I've paid attention to it, I think, tangentially over the years, but, talking about it in depth last year with Sean and just seeing exactly how much flow goes up as a result of this reconstitution, it is a bit eye-opening. So even listeners, if you're not really that familiar with how this reconstitution works and what it is, these are obviously names that you're interested in. We see your trading activity. We know how much volume goes up in these names. You guys are trading these names, Uber and Lyft, certainly on the option side and indeed on the underlying side as well. So if you're interested in that stuff, then you owe it to yourself to get out there and check out all this data. His report. Will it be available? Is it on tab forum, Russell? Is that where it will be?
It honestly, it went up on Tab Forum about 10 minutes before you and I got on the Skype together.
All right, listeners, if you're not members of Tab Forum already, get on out there, sign up, and you can check out all of Russell's great research, even when he's not on the show. It's hard to believe he's actually doing stuff when he's not talking to me, but he is, and it's interesting stuff. So check it out over there. Tab Forum is the place to go. Mr. Rhodes, we have time for pretty much one more product category before we answer a couple of questions. I will let you choose. Do you want to segue and foray into the shiny stuff or into the realm of ags?
Oh, let's talk about the shiny stuff. Gold's been moving finally.
Gold, yeah, you're right. Gold catching a little bit. We had someone write in last show pretty much saying, let's see if I have it. Optionsgame listens all the time. Says, you don't need to talk about gold anymore. There is no vol. And all he needed to do was say that. And all of a sudden we have the week that we had here, listeners. As of course, gold getting a little bit of love here after the equity markets. Not so much, at least earlier in the week. A little bit of a flight to quality, helping gold rally roughly 60 handles an ounce in about 1 week. That was the peak. It kind of has come off that since then. Net coming into showtime here, we're up about 27 and a half handles so far for this week. And that's up about a little more than 2%. But we're north of that level everyone was watching. Everyone was watching that 1300 level in gold. They're watching it. Well, we're through it pretty aggressively now. 1338 coming into showtime. Listen, 38.6 to be precise. So a very aggressive week here for the shiny stuff. All you gold bugs out there will be very happy, of course, the Fed helping to drive all that gold love here as well. Looking at vol, that's as our listener wrote in, it's kind of been almost a set it and forget it type of thing where every week upon week, gold vol is dead, gold vol is anemic, gold vol is nothing. As Nick has pointed out on the show many times, it's so cheap that you don't want to sell it, and you probably could buy it because it is scalpable. It does, as he likes to put it, pay the rent. If you're pretty aggressive with your scalps, you can actually make long gold volatility pay off. You certainly don't want to be selling it, at least at the levels it was at, because this week it's a wee bit higher. Looking across the board, gold vol up and up strong, up well over a handle, pretty much across the term structure until you get way out towards the end there, which vol is a little bit of a different bag out there. But in the mid portion of that term structure, up about 1 1/4 up to 1 1/2, almost 2 handles, depending on where you're looking. Let's see. Overall, another good week also for open interest. Gold, as you know, probably does about 2 to 3% increase in OI a week this week. Looks like about 10.5% actually. So a very, very robust week. Once again, July, where the action was. And let's see, we settled out. Mr. Rose, let's play the guessing game again because it's kind of fun. We settled out at 1338.6 coming in to show, not settled out, but that's where we are coming into the showtime. Usually people would say 1300 because that's what people like in gold. We're through that strike now. So I'll give you a hint. It's not 1300. If you had to guess what was the big option in the shiny stuff this week, what's your spidey sense telling you?
Did you accidentally say it?
I did. I totally did. I was hoping you didn't pick up on that, but I did.
Yes. I'm sorry. And it's like you'll say, unless you cheated, looked at the show notes. I never cheat on these things. And that's pretty apparent from the history of me being involved in predicting markets on this on your various
I thought I covered my tracks pretty deftly, but you picked up on it nonetheless, sir.
Yeah, you said it was 1340.
Yes.
The second you Freudian slipped it or whatever, I was like, he should just not ask. He should have asked for the number 2.
I had pity on you, sir. That was just pity. But yes, it was the 1340s. Lighting it up out here in July with about 12,000. It's a little bit over 12,000. But actually, now that I do my select all, which I like to do, I take it back, Mr. Rhodes. 1340s are actually the number 2. We have to go a little bit farther out, all the way out to September, where it was actually the 1400. So the gold bugs are back, Mr. Rhodes, and they say, heck with 1300. Let's go all the way up to 1400. That's where the action was this week. A total of 13,400 of those bad boys going up throughout the week. The lion's share actually on Monday. It's like about 6,500 on Monday, 1,400 on Tuesday, and then about 5,000 on Wednesday. Only about 500 today, not a lot today, but still about 13,500 going up this week. Not all, but most of that, about 8,000 of that was opening. So new opening positioning to the upside. Given how much we've been watching gold on the show and what we know about what goes up out there, I'm going to go out on a crazy limb and say that's opening bullish paper to the upside. That's usually what you see. You don't see a ton of aggressive overriding. It does happen, obviously, but usually the upside flow in gold is the gold bugs letting their love be known. Looks like some paper on the 1500s as well, also on Monday and also on Wednesday. So maybe not quite 1-to-1, but pretty close. About 7,500 on the 1500s on Monday and about 3,300 on Wednesday. Total of 11,000 and change on the week. Maybe some verticals going up, 1,400. We've seen wide verticals go up a lot in the calls in gold, so maybe 100 handles is pretty wide, but we've seen crazier things out here in gold land. In fact, the 1500s listeners are close to number 2, even though number 2 is at 1340. So it's 1400s, then it's the 1340s, 1400s, I should say, out in SEP, then the 1340s in July, then back to SEP for the 1500s, 1, 2, and 3. Not a lot of puts lighten up the tape here this week, listeners. But still, this has been the week a lot of people have been waiting for. A lot of the gold bugs have been waiting. We see you guys writing in, asking what's going on the 1300 strike. We see some of that call paper aggregating on the 1300 strike. So this is the week a lot of people have been waiting for, and you got it. Hopefully you're happy. The vol's up. The underlying's up. We know from history that the vol's not going to stay here, listeners, so enjoy it while it lasts. But still, interesting stuff. Let's look at the skew really quickly here. Where are we? Let's go out. Let's go past. I guess we have to do July because that's where so much of the paper is. Even though that's, it's about 20 days away, 19 days away. But still, we'll do it. That's where the action is. Even though it's against my better judgment. About the puts actually coming in, as you might expect this week, they were 7.6% cheap to at the money this week, 6.4%. So actually, I take that back. Puts actually getting a little bit of a bid, excuse me, this week. And the calls are actually also, interestingly enough, coming in, maybe because we saw the extent of the move. They were prepping for it last week. With, again, maybe the Fed watchers on the horizon were prepping for some upside. They were 11.4% rich to at the money this week, 10.4% in a full percent here in July. So again, maybe some of that event risk comes off the table. You see a little bit of that playing out, and maybe some people coming down the put side to hedge some of that. Mr. Rhodes, any of this week's action out here in the shiny stuff coming as a surprise to you over there at Tab Group, sir?
Not particularly. It's just, we always talk about volatility and harvesting the volatility risk premium and all that great stuff. But one of the things that I hate people that do this, but one of the things that I had been talking about for a while was with vol so low in the gold options, that you really did have an opportunity to basically get, a 90 delta position and not have to go too far into the money. And I might have some June options that I'm very happy with that I did just that with and actually treated them like a covered call and sold some out of the money calls periodically against them. Just because volatility is low doesn't necessarily mean that you can't figure out a way to take advantage of it one way or another. So when you were talking about the very wide, 100-point spread, 100-point spreads, I didn't see which ones you're talking about, but I assume that some of those calls were in the money.
No, not yet. They're 1,400, 1,500. So
really?
They got a bit of a ways to go.
Okay.
But
I was picturing more like a 1,250, 1,350 or something like that.
That would be interesting.
And that's the kind of thing that I was actually doing. So
yeah, we don't see a ton of in the money. That's an interesting point. We see a lot of out of the money, flyers and gold and weird flies. We've talked about it many times on the show. Weird ratios to the upside, going up to the 2,000 and 3,000 strikes. Kind of absurd ratios and flies up there. We don't see a lot of in the money call action in verticals that much, which is kind of interesting.
That might come from my history with gold being more about GLD for a while, and that would it'd be because you don't get the leverage that you do or the margin treatment that you do with gold futures with GLD. So the way that I would go about taking a leverage position in GLD was an in the money call. So that might be unique to
your
me.
GLD biases coming out. I've always said how you're so biased. So biased to GLD, it's embarrassing sometimes, really, to talk to you. What's not embarrassing though are your questions. So let's get to some of those. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your segment, the Futures Options Feedback segment. By the way, I love our audience, Russell, because I knew the second we mentioned sell in May and go away, it's like waving a red flag at the bull, right? They're going to come at you. And they're already responding. Someone already writing in with his own data. Let's listen. I don't know him. Michael McCary says he copied you on it too, so you can see it, Russell. He's got his own data on S&P performance stats for sell in May and go away. I think he's looking at it from a purely underlying perspective, though. We should clarify, of course, we weren't. We were talking options premium, right? A little bit different beast.
Yeah, a little bit different. Although the sell in May thing over the long term doesn't work nearly as much as it used to.
No,
maybe it never did.
Yeah. That's actually a good question. If you look back in time, did it ever really? Is probably. I always joke I banned that phrase because it's such a cliche. I ban it from the network, and here you have me saying it multiple times here on the show. But let's see. We got time for coming up against it. We got time for one, maybe two questions here. Let's go. You're a bit of a crude oil vol guy now. Let's go to this one here. Animele. I like that. Animele. Let's go to a funky spelling of animal, let's call it. They're writing here, OIV back in the mid-40s. Yes, you are correct. They go on to write, do you feel crude vol is somewhat unheralded these days as a tradable vehicle compared to equity vol? Maybe it's time for a crude vol tradable product like a VXX to get people into this space. Well, I know this has kind of been a burgeoning area of research for you, Russell, that, kind of crude vol. Unfortunately, like he mentions, you don't have the universe of tradable crude volatility products like you do in the equity vol space, where you have VIX and VXX and a bunch of other products. You name your way of carving up equity vol, it's a tradable product. Not so much yet in crude vol. I guess Animele is asking Russell, are we missing the vote? Do we need more crude vol products to really get this ball going?
Well, I'm a bit biased, and so the answer is yeah, we do. And there were OVX futures for a while, and they delisted them just before oil dropped down to that 25 to 30 range that I was talking about earlier in the show. And I remember, because my former place, getting calls, what happened to the oil volatility futures? Well, they gave up on them a little bit too quickly, which was unfortunate. They do have OIV at CME Group. I don't know what the politics and status would be around them trying, because that's a joint venture with SIBO. I don't know what the what the deal would be. I do know the original intent was to try and create some tradable products around OIV, but that would be the first step. He mentions the VXX to get people into the space. Unfortunately, what you really need first before you get the ETN is some sort of successful underlying in the form of futures. Yes. I personally believe that gold volatility and oil volatility differ enough in their behavior to equity market volatility to warrant some sort of tradable product.
Yeah, I'm with you. I think they kind of people forget. You mentioned the USO version. People forget there was GVZ as well, very briefly, gold volatility products, and they kind of they both kind of were shut down. I'm with you. They're kind of before their time. I think if we had these products today, I think they would actually be getting some traction. Certainly, a week like this, you'd be getting traction in both of those.
They trade the GVZ actually traded, because we did have that.
Yes, GVZ traded
out of the money mood,
like a one lot once.
And it occurred. Yeah. I traded one.
Yeah, you were the guy. You were the guy who traded it.
I traded I actually did do the first trade in GVZ, and what was the short term VIX, the 9-day VIX
Oh yes, I'm blanking on the ticker, but I know exactly.
I'm blanking on that because now it's like VIX 9, but before that it was something else. I did the first trade in that one. So.
Yeah, I want to do more questions, listeners. Unfortunately, Russell and I, whenever we get together, we tend to gas on because we're already out of time. So that music means, unfortunately, we are done. with the show again this week. Again, so keep those questions coming. Maybe we'll have an all question and answer episode one of these days. Those are always fun, and you guys have so many interesting, many, and varied questions. Remember, if you want to check out all this good stuff for yourself, cmegroup.com/Twifo is the place to go to get the reports. And while you're at it, head on over to bandtix.com. Kick the tires and light the fires on the quick strike, as they like to do. And FTSE Russell as well. They got all that great data coming out. If you're interested, if you trade equities and you like to trade yourself a little bit of Russell 2000, maybe you just like to see the data on the reconstitution. It's all there. FTSERussell.com is the place to go. Give them a follow on Twitter while you're at it as well. FTSERussell.com. Before we go, Mr. Rhodes, we kind of mentioned Tab Forum. What do you guys have in store for the folks that they come want to check out your research, sir?
Well, I mentioned there's something up there about trading crude oil futures or crude oil options against crude oil futures. For your folks, what will probably be most interesting by the end of June is I'm going to do something on the various ways, probably the simplest ways to trade volatility in different markets.
Oh, well, there you go. So, like comparing maybe an energy to a gold.
It kind of goes along with that last question.
Yeah, energy. Yeah, there you go. An energy to a gold. See, our listeners providing you with fodder for research, sir. There you go. All you gotta do is come on the show, and you get armed with requests and ideas for a whole month, at least, maybe 2. All right, and give the man a follow on Twitter while you're at it, listeners. He has good stuff out there as well. At Russell Rhodes, 2 S's, 2 L's, and then Rhodes, kind of like the island, but not quite. if that's not confusing enough for you. RHOADS is the way to spell it. Well, Mr. Russell, thank you for joining us. And on behalf of Russell and even Nick and Sean, who couldn't be here, and indeed myself and our friends over there at CME, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions. Keep them coming. And we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.